Brad, I just want to point out something interesting, which is this is the E-mini futures, the S&P 500. Overnight, we broke above this spike high. Now, there's going to be a lot of shorts um, who were accumulating sell positions here and got stopped out overnight, which is why we had the big spurt. We've closed above the point where these guys had their stops, indicating that these guys are all selling out. So what happens when the bears have given it a shot and they fail? The implication is that it takes them at least a couple of days to get their shit together and have another crack. So right now, where are we at? The odds are overwhelming that we test this high in the ES. Now, if we compare to the NASDAQ broke its old highs ages ago, and so what we have there is a non-confirmation. So until that non-confirmation is erased, we have the possibility that this is still a top. With today's price action, that lowered that probability measurably. So the odds of this being a top went down quite a bit overnight. And I think it's important to keep that into mind. So what is the highest probability now? The highest probability is the market tests here as a pass or fail. If it passes, we'll probably test here as another pass or fail. If it fails, we'll probably test down here again. Okay, so that's the way it goes. Now, I just want to run through a couple of other charts. TMX is the 10-year interest rate. It's just easier to follow than the bonds because of the way it rolls over. So here, what this is, the obvious implication of this is this incredible range bar here in the coronavirus thing is a classic blow off bottom top. And if we look at this over a 40-year chart back to 1981, that looks very, very strongly like a bottom. This looks like a change of trend in interest rates, and it's something that you all should be following very closely. So the new monthly charts have rolled over, so I think it's a good time to look at them. If we look at gold had an attempted pullback which failed. Single bar pullback, the same as this single bar pullback here, which failed, and we had a higher close the next month. We're looking for a higher close this month, and gold has a very strong odds of testing this 1930, whatever it is, high, 1923 high. As a pass or fail, the bears will be hoping that it falls there and makes a double top. A close above this high, and it's like off to the races. This is going to be a very, very strong bull market. If we close above this high, this is definitely one to watch. Now, a couple of other things that we can look. Bitcoin survived the big coronavirus panic that pushed it all the way down to a historic low and completely recovered the next month. Viewed together, these two bars are effectively a hammer candle. So what this is telling us is that all the guys who were going to sell sold out here, and there's very few sellers left. The market is retesting the lows now. This significant low, higher close, lower close. If we break the high of this bar, expect to test here and then here. If we close above here, wow, it's off to the races again. One that I'm following closely is Ethereum Bitcoin. So here we have retest variation bias setup. We have consolidation for the last few months, a hammer candle indicating a failed attempt to drive the market down, and this is just broken the high of a shooting star candle, which is a strong edge itself. So Ethereum looks to be much stronger than Bitcoin, which tells us that the strength in Bitcoin is spreading out to other markets. I really like this. I think it's a very good time to stay focused on alts, and especially the larger cap alts. I wouldn't go into the smaller cap alts yet. Let's look at Ethereum USD. Same thing as Bitcoin. We had this incredible drop all the way down, which did not break the previous low. So we have a higher low in place, potentially major trend reversal. I think the odds are strong that we get to 369, and then if we close above that, then we can start to target further up. let's look at a couple of other things. Natural gas. Let's look at a month out. So people have been, I tried to pick a bottom in natural gas like in 2010, and then I tried to do it again in like 2018, I think I did here. It's just been a terrible market for bottom picking. It's like, God, what a fucking disaster. Um, if you look at it, you have to look at it on a back-adjusted basis, which TradingView doesn't have. So I'm looking at the Q month, which is August. You can see it's just a constant, forever downtrend. And we're seeing signs of life. Look at this big long wick off the lows and here. And let's look at it on a weekly basis. Very strong move off the lows. Have we had a daily retest? Yes, we have. You can see micro gap, big move off the lows, which is an indicator of further strength to come. Very shallow retest, small retest, not all the way back here, just to here. Natural gas looks tentatively like it's found a bottom. And I feel stupid even saying that. Let's look at crude. Let's look at the front month and then let's look at August. Gangbusters after the big fall. Notice the retest off the lows. Higher close, lower close, long here, stop here. We are objectively weakening. You can see the angle from here to here, from here to here, from here to here, from here to here. We're going up, but we're going up in a weakening fashion. This is, when this falls, this is probably going to be a significant pullback. So, a move from, 100% move in a couple of months is doesn't happen too often without a pullback. Let's look at the euro. Okay. In the coronavirus, euro down, dollar up. Big bounce back reaction, trading range, broke out of the trading range, euro up, dollar down, completely, no one knows what's going to happen here. So how do you interpret this type of price action here? So when you have price action which has a lot of overlapping bars, see this bar has a lot of overlap with this bar, has a lot of overlap, complete overlap, a lot of overlap, a lot of overlap tells us that there's two-sided buying and selling. Two-sided buying and selling tells us that we're probably in a trading range. We're probably not in a trend anymore. So look at all these lower wicks, upper wicks. The market doesn't know what it's going to do. So one of the things that we know about choppy bullshit markets is that once they start being choppy bullshit, they have a strong tendency to continue. So I would consider this to be a choppy bullshit market. I would, in a choppy bullshit market, you want to buy at the bottom of the trading range and sell at the top of the trading range. And you want to completely stay away from anything in the middle. This is all shit. This is all just out to fuck you. All right, guys, that's about all for today.